Hi everybody, welcome back to the 10th of an hour with Griffin Bridgers. For today's episode, episode 33, we're going to start a new line of series called Estate Plan Mythbusters. And today's myth that we're going to tackle deals with the issue of gifts made within 3 years of death. Now, as always, this presentation is not intended to substitute for legal or tax advice. So the myth itself that I see perpetuated by a lot of wealth advisors and tax professionals is that any gift that's made within 3 years of death will be subject to estate tax. In other words, gifts made within 3 years of death are pulled back into your gross estate when calculating your estate tax. But this isn't quite accurate. The fact is that only certain gifts that we'll look at in a minute that are made within 3 years of death will become subject to estate tax. This isn't a blanket rule that applies to every single gift made within 3 years of death. The only blanket rule I want to call to your attention, which rarely applies, is a rule known as the gross-up rule. And this may be the origin of this myth because this rule can be easily misstated, especially based on the fact that it used to apply much more in the past. But any gift tax that you actually pay out of pocket within 3 years of death will be included in your gross estate. So the gift itself isn't included in your gross estate, but the amount of gift tax you paid out of pocket within 3 years of death is instead included in your gross estate. Now, it's important to note that under current law, it's very difficult to ever pay any gift tax out of pocket because this requires you to first make gifts in excess of your $15,000 per donee annual exclusion for any present interest gifts, and it also requires you then to use up your entire $11.58 million annual or lifetime exclusion as an applicable credit against gift tax. But there are still some bad gifts, quote unquote, that you can make within 3 years of death that will be included in your gross estate. This is under Code Section 2035. The biggest one is any sort of gift of the ownership of a life insurance policy or incidence of ownership in a life insurance policy. So, in a situation where you're within 3 years of death, oftentimes it's better to have the policy be purchased by an irrevocable life insurance trust, as we've talked about in past episodes. And as long as that trust is a grantor trust, typically there's no income tax issue or transfer value type of issue that can pop up. But it's important to note that there are some valuation issues that surround the gift tax value of a life insurance policy, especially if death is imminent. That's a discussion for another time, but for the time being, you want to make sure you avoid gifts of life insurance policies within 3 years of death. Another type of bad gift that can pull back the gifted property into your gross estate is a gift where you retain control or use at any time, but then within 3 years of death, give up that control or use. These are the retained powers discussed in Code Sections 2036, 2037, and 2038. Another one you often see in 2037 is a reversionary right, where the gift could come back to you after a certain amount of time. If you give that reversionary right up within 3 years of death, that would also cause that property to be included in your gross estate. And then finally, anytime you exercise or release a general power of appointment, it's as if you owned the property and transferred it. So, if you exercise and release a general power of appointment, but retain a beneficial right in the trust after the release or exercise of that power, then you run into a situation where you have retained use or control as talked about in the previous bullet point. So, if you then disclaim or release any of your beneficial rights in the trust, or maybe your trusteeship of the trust within 3 years of death, that could also end up being a situation where the property is pulled back into your gross estate from that trust. So, these are the big 3 bad years or 3 bad gifts that you can make within 3 years of death. Gifts of life insurance policies, release of retained use or control over previously gifted property, or the release of retained use or control over property where at any time you've held and either exercised or released a general power of appointment. As always, if you have questions or topic suggestions, you can email those to me at griffin.bridgers@gmail.com. Thank you for listening to this episode of the 10th of an Hour, and I look forward to seeing you in the next one.